Hi, welcome to EQD Research Global Insights for Tuesday, April 6th. Today, I'm going to focus in on the three major U.S. indices and their respective volatility indexes. But before getting started, we're a few weeks into producing this show a couple times a week. Happy to see it continue to gain viewers and traffic and subscribers. You can easily help out by hitting that like button below, subscribe to our channel, also hit that little bell thing that will give you a notification when these short videos go live, usually every Tuesday and Thursday, but maybe a third time if we ever have some market volatility to talk about. Today, we're going to start out with a tech-heavy NASDAQ 100, which is up slightly on the day to 13,630. The associated NASDAQ 100 Volatility Index down 30 cents to 2061. As of midday, the low on the day for VOLQ is 2031. This would be the lowest level. This is the lowest level since the pandemic started impacting the financial markets early last year. Do keep in mind that April is an earnings month, and there's usually a bit of a relative tailwind for VOLQ versus VIX during the months where a big portion of the NASDAQ 100 is reporting earnings. Running the numbers back to 2014, the average VOLQ premium versus VIX for the months of April, July, October, and January, when earnings are announced, is about $1. When we look at the average over the course of the non-earnings months, those other 8 months, it's only a 30-cent premium. So we definitely see an impact of earnings on VOLQ. Now, at least one trader is expecting the NASDAQ to stall out for the balance of the week. In 3 different lots, just over 300 bearish call spreads were sold using the Friday, April 9th option. The trader sold the April 9th 13,640 calls, purchased the 13,650 calls. Net average credit on these trades was $495. For this trade to work out, the NASDAQ needs to be below 13,640, and the risk, if NASDAQ closes above 13,650, is $5.05. In small cap land, the Russell 2000 is up slightly as well. Russell 2000 Volatility Index is down 85 cents. It's at 2734, still remains elevated relative to VIX, even though the Russell 2000 is having a strong 2021. As we've mentioned before in this program, the elevated RVX is partially impacted by call buying. It's sort of a fear of missing out small cap trade that seems to have been hitting the markets the first few months of this year. The elevated call volatility does create some opportunities for bear call spreads. And one trader using the April 9th options once again sold the Russell 2000 2295 calls for 1062, purchased the 2310 calls for 622. This takes in a credit of 440 with a risk of 1060 if the Russell 2000 blows through that 2310 level through the end of the week. There is a bit of a buffer for this trade relative to the NASDAQ 100 bear call spread, as the Russell 2000 was at about 2273 when this trade went off. And as a quick reminder, Russell 2000 options now have Monday, Wednesday, Friday expirations, and there are also mini rut options available, which are 1/10 the size of the Russell 2000 contracts, and they're offered using the very appropriate ticker MRUT for mini rut. Finally, the S&P 500 falling in line with the NASDAQ 100 and Russell 2000, up slightly on the day. VIX is a slight outlier relative to the other 2 volatility indexes. It's actually up about 20 cents to 1810. The futures prices are slightly down to flat with no contract losing more than 10 cents. What is interesting about the VIX curve is the shape has steepened a bit in the farther months relative to the past few times I've been talking to you on this program. And this has happened as VIX has worked lower. Also recently, July was the peak level on the curve, but that has shifted out to October, which is up at 2420. On the trading front and looking out to June in the VIX complex with the VIX futures at 2240 this morning, there was a buyer of 2,000 of the VIX June 26 calls for 237 each. They sold 3,000 of the June 20 puts for $1.72 each. The result was a credit of 42 cents for each 2 puts sold, 3 calls purchased. The payout on this is fine as long as spot VIX rebounds to the 20s and stays there through June expiration. Also, this trade is set up very nicely for any sort of volatility event over the next couple of months. So, thanks for joining me for EQD Research Global Insights for April 6th. If you like what you heard and found it useful, hit that like button below. Don't forget to subscribe. And of course, we are always open to suggestions on how to make this program better. If there's some markets you'd like me to look at, specific trades you'd like me to look at, I am more than happy to comment on those things. Leave comments below or feel free to email me at rhodes@eqderivatives.com.